globalized world, one where countries, economies and companies are more interconnected and interdependent than ever before, risks that once seemed improbable and even remote have become the norm. The threats from disruptive technologies, societal shifts and a complex regulatory environment are all adding up to the risk landscape. For business leaders across the world, expect the unexpected has become the mantra. Over the last couple of years, Indian organizations have been attacked by different kinds of risks. Take the case of Maruti. An unexpected riot and subsequent lockout and strike in Maruti's Manesar plant in 2012, which lasted for over 4 months, cost the company a loss of 1 billion rupees. An environment of corruption hit the corporate sector quite unexpectedly over the last couple of years. Since 2010, corruption cases have seen an unprecedented growth. The Corruption Perception Index rating of India was 87 in 2010 and slipped to 94 out of 177 countries in 2013. The 2G telecom scam was one of the biggest corruption scandals that hit the corporate sector and the Indian economy in recent times. Then, a sudden move by the government on retrospective tax amendments saw Vodafone and many others embroiled in a string of tax disputes in India. A Ficky Pinkerton India Risk Survey 2014 shows that 1. Corruption, bribery, corporate frauds, 2. Strikes, closures and unrest, and 3. Political and governance instability were the top 3 risks that organizations in India faced in 2014. In the current global economic environment, identifying, managing and exploiting risk across an organization has become increasingly important to the success and longevity of any business. However, in India, risk consciousness is very low amongst corporate India. A survey shows that only 24 of the top 100 Indian companies by market capitalization have formed risk management committees on their boards. To navigate in the fast-evolving risk landscape, organizations need to strengthen their risk mitigation practices, thereby building risk resilience. So which are the companies that are building up strong risk management systems within their organizations? To honor and salute those companies that have put in place a robust infrastructure for risk management, CNBC TV 18 has partnered with ICICI Lombard General Insurance to initiate the India Risk Management Awards.
If human beings never took risk, we would have remained cavemen. So it's important for all of us to take some risk, and at the end of the day, without risk, there is no business. Well, I think it's equally important for people to be conscious of the implications of that risk, and we need to quantify that. At the end of the day, whatever risk we take, when the unfortunate event that may happen does happen, someone has to pay for it. Either the banker, if the company is bankrupt, pays that price, or the shareholders pay the price. And I think it's only fair for the shareholder to know what kind of risk is being taken in the organization. So risk taking is very, very important. That's what business is all about. But it's important to understand the consequences of the business calls that you're taking.
As a curtain raiser to the India Risk Management Awards, CNBC TV 18 and ICICI Lombard did a series of panel discussions to ask the many vital questions surrounding risk and its management. Clearly, Indian organizations are gearing up to the importance of managing risks. On the other side of the break, we bring you pre-jury round and the extensive debates and discussions that went into narrowing down the nominees from the 1300 entries received for the India Risk Management Awards. The CNBC TV 18 and ICICI Lombard India Risk Management Awards received 1,300 entries from large, medium and small corporations, including public sector enterprises. To ensure that this whole exercise of picking the organization with the best risk management practices in the country was done scientifically and impartially, CNBC TV 18 roped in the country's foremost consulting firm KPMG as its knowledge partner. KPMG tapped into the basic data that was gathered from a specially created microsite for the award. It then undertook its own due diligence, gathering first-hand information from the participating organizations.
As we had the discussions, the nominees were, one, they were excited that these awards were happening and somebody was recognizing the fact that risks are integral to doing business and are important as a growth agent rather than a deterrent to growth. Secondly, I saw a lot of curiosity and a lot of desire to gain knowledge as to what risk management is all about, what should be the ideal state for a risk management function, and also to learn from some of our experiences, because we were talking to so many companies about their risk management policies. So in all, there was a high level of enthusiasm. There was a great degree of desire to actually project or demonstrate that they were doing, they were executing risk management in the right way and right manner, and they wanted some affirmation as we spoke to them as to whether what they were doing was in line with some of the best practices that are there around the world.
In the first stage, KPMG assessed the entries based on the following key parameters. Is risk management present across the organization? How robust and effective is the risk management system? How have risks been tackled in the past?
So we, as the applicants sent across the applications, we had a standard set of questions which were really the hygiene questions in terms of the structure of the risk organization. What is the interplay between the executive organization? What is the interplay between the board and the chief risk officer? And essentially how important is risk management for the organization, and how well does it permeate throughout the organizational layers right down to the lowest level of hierarchy. So that was the first criteria to see that is risk management actually present across the organization. The second important criteria was to understand what are the systems that are used or the processes that have been established for risk management. Are they robust? Are they new age? Are they relevant for the organization? And more importantly, are they being effectively run in an organization rather than being just a form filling or a tick in the box exercise? The third criteria really was to see as to, is there any impact or is there any specific incident or case or development wherein a risk has been well managed, or wherein the risk management function has enabled an organization to take a risk and venture into unexplored or uncharted territories or areas of business. So broadly, that was what the criteria was. And then of course we had detailed discussions in terms of what were the outcomes. And one thing that we also did look at was, were there any adverse indications of an organization which could basically highlight that the risk management function was not working effectively or had serious flaws in its operation. So then we also spoke to each of the nominees. We actually had a 45-minute to an hour long discussion, and in some of the cases actually promoters of very large organizations came on the phone and spoke to us about risk management, and it was a fairly insightful discussion and really heartening to see the level of involvement that the organizations played to risk management really.
In the second stage, the 260 companies that were shortlisted by KPMG were presented before pre-jury members, which included PV Subramaniam of Subramani.com and Sandeep Parekh, founder FinSec, both having vast experience in the BFSI sector and in the field of risk management. They deliberated for hours on the companies shortlisted by KPMG and whittled down the nominations to 135, about 10 in each category.
Managing risk is very important, and it's nice to create an initiative across the country, because we today in the jury round spoke not just of financial risk but other risks. Financial risk is something which more people understand, but the other risks which you run in the business, which could be anything from political risk to any other risk, it's not a question of whether the business itself is risky. The question is whether the people who are managing the business know the risk, understand the risk, put a system in place and appreciate the risk. That is what this jury saw. This jury did not see this as a corporate governance award or size award or anything of that sort. And it would have been nice to have more nominations, but of the nominations which were sent, the competition was intense, and it's very likely that it will create more awareness later on, and more people will talk about risk, because talking about returns is much easier. It's about risk, managing risk, and that's what we did speak about.
I think very tough competition in most of the areas, and there is obviously it will also send a message to other people that they need to look at risk more closely. There are lots of companies which are large but which have not yet looked at risk. And I hope if the message goes out that it's something which they need to focus on instead of just leave it to chance, I think we'll be a much richer and better economy as such. Risk is something which has also been kind of misunderstood. Last year, Goldman Sachs in a report claimed an event occurred which was a 30 sigma event. Translated into plain English, it means it was an event which occurred which would happen more than once in the lifetime of this universe. So obviously people don't understand risk as well as they ought to, and it's something, it's an area which needs to be chewed into smaller bites, and I hope that we are able to kind of drill down and look at various segments, the component elements of risk, and I hope again this award will help drill this recognition of appraising and understanding this better.
The jury shortlisted nominations for the final jury round for the following categories: Private Company of the Year, PSU of the Year, Best Supply Chain Risk Management, Best Sustainability Risk Management, Emerging Company of the Year, Conglomerate of the Year, Firm of the Year Automobiles, Firm of the Year FMCG, Firm of the Year IT, Firm of the Year Infrastructure, Firm of the Year Pharmaceuticals, Firm of the Year Telecom, SME of the Year, International Company of the Year, Firm of the Year Agriculture. On that note, it's time for a short commercial break. When we come back, we take you through the third and final stage of nominating the winners for the India Risk Management Awards. The eminent jury of the India Risk Management Awards met at the ITC Grand Central Hotel in Mumbai on 9th March 2015. They had a tough task at hand to pick the winners in 15 different categories. The three-member jury panel came from diverse fields such as technology, finance and manufacturing ecosystems. They are S. Mahalingam, former CFO TCS, D. Muthukumaran, CEO Aditya Birla Capital Advisors, K. Chandrasekhar, Senior VP Mahindra & Mahindra. KPMG handed out to them the list of nominations in each category. Each of the finalists was scrutinized in every possible way. For KPMG, it was a session of answering tough questions from the best in the field. The jury looked at three major parameters before choosing the winners, which were: how does the organization embrace risk as an opportunity? Does the organization insure its risks? How does the organization balance its strategic vision and inherent risks associated with it?
I think the categories were well selected in terms of, for example, the different categories like infrastructure or the pharma and several other categories like that were well sort of identified, and particularly the conglomerate award, the firm of the year for the risk practices were all well selected. I think it has been a very interesting and also timely kind of institution of an award that should encourage people to manage their risks better. I think what I take back is that this award recognizes the importance of risk management. If you look at a watershed, for example, 2008 changed the way you look at risks, and since then it has increased manifold in the sense that you have what we call a VUCA environment today, and faced with all these complexities and the new kind of environment that develops each day, I think risk management has become an important function, and in fact it could be called the most important function in an organization, and it affects all, whether it is employees, stakeholders, the kind of therefore it has assumed quite a big of focus also, and I'm glad that a lot of companies actually are practicing that. When we went through all the kind of nominations and the kind of initiatives that have been done, it's truly remarkable that the kind of awareness that is spreading, but it requires more focus and more organized processes. But I think there's a lot happening there.
The jury debated extensively on certain categories. They found it a challenge to choose the Emerging Company of the Year, as they believe these companies are still grappling with the processes and structures around risk management. Besides, they decided to drop the award for SME of the Year, International Company of the Year and Firm of the Year Agriculture categories due to inadequate data.
Emerging Company of the Year was something that was deliberated on very extensively, because these are companies that are attempting to emerge, and many of them are entrepreneurial companies driven. Lack of resources is always a big issue, and they are trying to bring out an idea, and at the same time they are trying to insulate the organization from the risks that are inherent in that business and so on, and kind of action that they have got to be taking. Therefore, I don't think we have got very satisfactory answer in terms of whether they have processes, whether they have structure, and whether they have holistically looked at this whole thing, both from a strategic and operational perspective. All that we can say is, are they showing commitment at the earliest stage, and taking their track record over a period of time, 5 years and so on. What have we seen there? There are infirmities, but it is more an award for commitment to a concept, rather than for saying that this company is the best in class as emerging company in the risk management framework.
The jury also suggested adding technology and BFSI sectors as new categories from next year, taking into consideration financial risks such as equity, interest, currency and shifting markets as criteria to make the awards more robust.
This is the first award for risk management by CNBC TV 18, and like I said, it's a very important area. In the last 5-7 years, the extended downturn has clearly taught us that cash is king, risks need to be addressed, we need to be aware, we can't be caught by surprises, and there are many surprises. So this is a very important area, and it is very heartening to see the kind of awards that we have got across various sectors and from various companies. It needs to run a lot more deeper, into the corporate world, and I wish it all the best as it goes forward. That it will actually, sort of cover many more companies, and many more aspects of the risk management process. And I think this awards highlights the fact that there has been a lot of focus that has been brought into this area, and even that area of risk management is fast emerging, and it's something that nobody can neglect, and all the corporates need to focus on. It's a great start. You have had sort of multiple cuts of the award. You've got sector award, PSU award, private companies of the year award, and some functional areas. As you sort of go forward, I think you can also take up more areas to sort of study, and the risk management process itself is evolving as we speak, and as it reaches a stage of maturity, it can be more comprehensive than where we are today.
12 winners will be chosen from the 135 nominations selected out of the total 1,300 entries received for the India Risk Management Awards. Well, the countdown has begun for these reputable names that will contest for the prestigious trophy, as they wait for the ultimate recognition for building the most robust risk management systems.